In this video, I'm going to share with you why Singapore Exchange Limited looks like a good stock and why its upcoming ex-dividend date matters. Let's get into it. Hey friends, welcome back to the channel. I'm Iggy here, and I've been covering topics such as stocks, finance, CPF, and basically everything related to growing your wealth. The Investing Iguana is featured and ranked 8th in the 2023 Influential Tigers by Tiger Brokers, with over 800,000 reads. I've also covered over 500 videos and over 250,000 watch hours as of September 2024. I occasionally focus on topics related to regional or world economy too. Today, we're diving into Singapore Exchange Limited, also known as SGX. It's a stock that's been catching my eye lately, and there's a good reason for that. SGX is about to go ex-dividend, which is a crucial date for investors to know about. First, let's break down what ex-dividend means. The ex-dividend date is when a stock starts trading without the value of its next dividend payment. In simple terms, if you buy the stock before this date, you'll get the upcoming dividend. If you buy on or after this date, you won't. For SGX, the ex-dividend date is coming up in just 3 days. The actual dividend payment of 9 cents per share will be made on October 25th. This might not sound like much, but it adds up. Over the past year, SGX has paid out a total of 36 cents per share in dividends. Now, let's talk about dividend yield. This is the annual dividend payment as a percentage of the stock price. SGX's current share price is 11 Singapore dollars and 68 cents, which gives it a trailing dividend yield of 3.1%. That's not too shabby in today's market. But here's the thing about dividends, they're not guaranteed. Companies can cut or suspend dividends if they're not making enough profit. That's why it's crucial to look at whether a company can sustain its dividend payments. One way to do this is by looking at the payout ratio. This is the percentage of earnings that a company pays out as dividends. SGX is currently paying out 62% of its profits as dividends. This is a pretty common level for most companies and suggests that the dividend is affordable for now. Another important factor is earnings growth. A company that's growing its earnings can more easily afford to grow or maintain its dividend. The good news is that SGX's earnings per share have been growing at a rate of 8.8% per year over the past 5 years. This steady growth is a positive sign for the sustainability of the dividend. Speaking of growth, SGX has been increasing its dividend payments too. Over the past 10 years, they've raised the dividend by an average of 2.5% per year. While this isn't a massive increase, it's still a positive trend. It shows that the company is committed to returning value to shareholders and has been able to grow its dividend alongside its earnings. Now, you might be wondering if all this makes SGX a buy. Well, it's not quite that simple. While the dividend looks solid and the company has been growing steadily, there are always risks to consider. For one, SGX is paying out more than half of its earnings as dividends. While this is sustainable for now, it doesn't leave a huge margin of safety if earnings were to decline. Also, while earnings growth has been steady, it hasn't been spectacular. So, what's the bottom line on SGX? It looks like a decent dividend stock with a solid track record. The upcoming ex-dividend date could be an opportunity for investors looking for income. However, it's not a screaming buy at current prices. If you're considering investing in SGX, here's what I'd suggest. Keep an eye on the earnings growth. If it can maintain or accelerate its current growth rate, that would be a positive sign. Watch the payout ratio. If it starts creeping up significantly above 60%, that could be a red flag. Consider your overall portfolio. SGX could be a good addition for income-focused investors, but make sure it fits with your overall investment strategy. Remember, investing is about more than just chasing dividends. It's about finding quality companies at good prices that fit your investment goals. That wraps up our look at Singapore Exchange Limited and its upcoming ex-dividend date. If you guys enjoyed this video, then you're going to love my recent video titled Why Singapore Exchange's Hold Rating Could Impact Your Portfolio. In that video, I dive deeper into the analyst's perspectives on SGX, exploring why it's currently rated as a hold and what that means for investors like you. I break down the potential impacts on your portfolio and provide insights on how to approach SGX in the current market conditions. It's a perfect follow-up to today's discussion and will give you a more comprehensive view of SGX as an investment. You can find the link to that video in the description below or in the end screen. Thanks for watching, and I'll see you in the next one.